Hello everyone, welcome to the Elliott Wave Forecast.com YouTube channel. My name is Henry. Today is Wednesday, June the 5th, and the time is around 3:45 a.m. GMT. We will be updating the chart of the DAX. This is a 15 minutes chart here. Now we can take a look here, and we can see this decline to 11625 ended with W in the blue degree. Alright, so what that means is that now we're supposed to be doing an X in blue, which subdivides into as of now subdivides into the first zigzag rally here, right? So technically this still needs a C here, and it's gonna end only W, right? And then do an X with a Y, okay, before finishing up the Y in blue. Alright, so that's kind of the structure what we're looking for. Basically further correction or further rally in the shorter cycle in the DAX before ending the X here. Okay, so you can see that the rally from 11,625 has the look of an impulse. We got this 1, 2, and then subdivides into 5 waves, 3, 4, 5. So we're looking for a 5 waves up here. And in the shorter cycle, of course, I think it's kind of risky to chase it, because you can always call it completed. For example, you can adjust the count a little bit and call it with A ending here. So shorter cycle is always a risky proposition for you guys to chase all this move higher, even though it still can extend a little bit higher to finish a 5 ways up. And then after that, because it shows a 5 ways up, most likely then the pullback is going to stay above here. Okay, 11,625. This bigger pullback here is going to likely stay above 11,625 for at least one more leg higher. Okay, at least we are looking for at least some sort of an ABC type of correction at the least, since the first leg is a 5 waves here. Okay, now if we look at the larger time frame in the 4-hour, this is the DAX. We can see here from May the 3rd 2019, okay, it has started to sell, right, sell off, and hit the perfect 100% extension of this connector here. And as you can see, there's a Y in the red here. Alright, this is Y in the red, so this is your Y in the red, and then there is a W in the blue here. So that's your W in the blue. So according to this count, then we are doing the X in blue, and the first leg higher here is looking like an impulse, and that's why shorter cycle at least we can see some sort of ABC at the least, right? So this can either be ABC like this, and then maybe ending the X here and then go lower, or this can be only the first leg of the, or it can be sort of a bigger correction, right? It can be a bigger correction, so something like this. So 5 ways up, ending very soon, pull back, another leg higher to finish ABC, and only ending the W here. And then you still have a double zigzag with an X like this, followed by a Y to the upside. So a double zigzag like this, alright, before ending the X, and then turns lower again. Now anyway, at this point, all we got from the May the 3rd high is only a 3 swings. A 3 swings is not a bearish sequence. It's only 3 swings. It's corrective, and so that means remember, we have a 10-year bullish cycle. We've been going up for 10 years from 2009. So we have not broken that trend yet, at least, and therefore, since we ended the cycle in 3 swings, right, that means in fact there is no guarantee we're gonna get another leg lower, right? I mean, we might as well start a new bullish cycle here, maybe 1, 2, 3 like this, 4, 5, which is possible. So The larger time frame, we will confirm it at later points whether we're gonna see another leg low or not. But at least in the shorter cycle, at least what we know in the shorter cycle is that this leg is impulsive. That's what we know so far, the information we got. This is impulsive. So what we can conclude then is in the shorter cycle, okay, we can see at least another leg higher, right? So if this is a 5 waves, right? So you can call this with A or with 1, doesn't matter, right? If this is 5 waves, then at least we should get a wave C or a wave 3 as far as the pullback stays above 11,625. That's what we can conclude with a bit higher degree of probability. So at least a 3 bounce can be expected in the DAX. Now in the DAX, of course, the whole market is one market, and you can see, for example, if you take a look at the S&P, right? If you take a look at S&P, these two also rally. Everybody rallies, of course. These two also hit perfect 100%. Look, 1, 2, 3, right? Perfect 100% and then rally. So a lot of these indices hit perfect 100% rally. If you take a look at Nasdaq, Russell, they all hit perfect 100% rally. Now I know some of the indices like the Dow, it misses the 100%. I know that, and it. I mean, this is an example in which indices did not reach the 100% and truncates. This is the Dow. You can see right here, if you measure the 100% extension, right, it missed a little bit, but the fact is that the rest of the indices, the S&P, the Russell, and the Nasdaq, they do hit the 100%, and so this is the one that did not quite hit it and then starts to end the cycle already now. But so everywhere in the market right now, I can see only 3 swings pullbacks, at least in the indices, not specific stocks, right? At least in the indices, I can only see a 3 pullback. So that is not really, I mean, that is still considered like correction, 3 swings, right? It's not an impulse or anything from the peak. And so therefore, again, I think we need to see it step by step in terms of the larger point of view, right, in the larger time frame. But now our focus should be on the shorter cycle, in which we see what looks like an impulse from the lows, and therefore we can say that we can see at least another leg higher to finish an ABC. Okay, so if you like to see other instrument or other time frames, then feel free to join our service. We have 14 days free trial. The link is provided on the description of the video. Otherwise, wish you all have a nice day and see you all again tomorrow.